Okay, Waiyaki, lots of results coming through. Obviously, that's, you know, sort of led to more positive sentiment in the market. Which ones impressed you today?
Well, I would say it was pretty much expected that there would be significant profits, but I must say KCB stood out amongst all the banks that posted their profits because of one or two things. If you compare them vis-a-vis Barclays, Barclays had a one-off transaction where they sold their asset business. I mean, they sold their business to Standard Chartered. But when you look at Barclays year-on-year, I mean, a KCB year-on-year on growth, it goes to show you that there's a very good trend in terms of the way forward for the bank. And even when you had like a one-on-one with the managing director, Martin Oduro-Otieno, you hear what he has to say about it, and what they're looking at going forward in terms of growth of the business is very positive. So yes, I would say that was a bit of a very good indicator as to the way forward in 2011.
So would you say KCB is a buy? I mean, the current trading price somewhere in the region of 23 Kenyan shillings 25 cents. One of the criticisms of Kenyan Banks is that although everybody was expecting profits to be up, the fundamentals good, the stocks are quite expensive.
Yes, they are. I think you notice that it's about 23 shillings, and you notice something else about Barclays. They're applying to have the stock reduced between, for every share held, to be divided by 4 times. There's that sentiment that as much as they're reaping or they're raking very good profits, this is not translated to the level of the ordinary shareholder. Unless you're an institutional shareholder, the ordinary shareholder cannot access the same because it's slightly expensive.
Let's talk about results coming through from the cement manufacturers, because we do know there is a construction boom in Kenya and generally in East Africa, and the sector was expected to do really well. Lafarge Bamburi posting pre-tax profits of 7.3 billion shillings.
Yes. Yeah, well, it's very, if you look at it, almost it's like a knock-on effect. If banks are declaring profit, there are certain key industries within the sector that will also mirror the same. The manufacturing industry, Kenya Power and Lighting, you notice there's increased supply of electricity. You notice the Bamburis, the cement manufacturers, because demand has increased. Something else that has been noted, if you look at it, manufacturers last year borrowed almost 26.5 billion as opposed to 900 million the previous year. So it goes to show you that there is a lot in terms of the economy growing, and there's demand for cash, and banks are more than willing to lend the same.
You mentioned Kenya Power and Lighting Company, and you obviously say that the stock's being buoyed by the huge infrastructure drive in Kenya.
Yes.
But their results show that they didn't do particularly well across the board. They've managed to recover profits from tax, for instance. They've managed to recover and manage their operating costs, but revenues declined by about 17%.
Well, if you look at it the way forward in terms of growing, there's still a lot of investment, capital investment in terms of, with the rural electrification project going on, there's a lot demanded in that, and that, of course, will increase the general operating expenses. But what is the net effect in terms of that? You'll have more people who are actually, you're supplying electricity to, and that in hence will increase whatever your book balance. You'll notice that there's much more you're supplying to. So in the long run, it will end up being much more profitable than it is right now.
Obviously, KPLC has been under scrutiny because of the rights issue near the end of 2010. That's had some sort of adjustment on the pricing for KPLC. When are we going to see the upside, and what's going to lead to an upside in that share price?
Well, we'll need to look at it, give or take, give it about a 2-3 month period notice, because investors, there's been a lot of things happening in the market aside from just the general stock exchange, because you notice there was an issue of the political temperatures. People are unsure about it. Those are what I would call the side shows. But given it all, there's the general feeling that Kenya means business. There's a lot of business opportunity, and we need to go forward. So give or take about 2 to 3 months, you'll start noticing the trend in terms of the share price, in terms of the demand for the same, and also a lot of investor education. They understand that this is a viable investment. It may not prove right just yet immediately, but in the long run, there's much more to gain from it.
News out is that Safaricom is having a bit of a board reshuffle. Now, we know that despite it being the dominant stock, it's starting to feel the heat of competition. It's starting to feel the heat of regulation. What is this board reshuffle telling you?
Well, I look at it from the point of view that there's a new man on board. When Michael Joseph exited, there's Bob Collymore who's come on board. And also when you come on board, there's a new way you want to turn your business around. Maybe you come on board with a slightly different business model than that was there. And then too, the environment itself has also created the need for rapid ability to be able to keep up with the competition. Calls have become cheaper, so that has cut down the revenue significantly in terms of earning from calls. So the next frontier is data. But even with data, as you mentioned, there's the issue of regulation, interconnectivity. There's so many other factors on board. And now you're looking at, okay, I need to have a board that I feel is going to help channel or take the business to the next level, having in mind what is happening on the ground. So that could also be borne by the need to have like the board reshuffle.
Okay, thanks Hinga Waiyaki. I think it's about time we told our viewers that actually your first name is Hinga, your last name Waiyaki. Thank you so much for your time. All right,